Hi everyone and welcome to another live trading series. It is my bi-monthly income update. I haven't done this in a while. It is March 5th. I'm recording this on a Saturday. I'm going to give you just an update on my income. Apologies for the awkward edit. I keep forgetting to plug the Discord server. Due to popular request, I started a Discord server. You access it via Patreon. It's called Canadian Finance Pro. It's just $12.50 a month. If that's an issue, let me know. Maybe I'll change it. But I have a Discord server due to popular request. We have around 17 people so far, all Canadian, all options traders, most of them beginners, and you can ask me any question because I can't answer questions that quick and that often on YouTube anymore, just due to the popularity. Anyone on Discord, I have it on my phone. I check it constantly. If you want to get into trading, if you have options, questions, trading questions, stocks, anything related to Canadian Finance, which is why it's called Canadian Finance Pro, but more detail on that logo and Canadian Finance Pro in the future, just join the Discord, try it out for a month. If you don't like it, you can cancel. Just let me know. Please join. Back to the video. Awkward edit. Finished. I haven't been filming many trading videos because the market's been tanking and I haven't been trading that much. If we jump right to the S&P 500, year to date, it is down 9.5%. A little stressful. I've made some bad moves. If you've seen the title of this video, I've only made $3,000 in 2 months. That's because I lost $16,000 pressing the wrong button. What did I do? I pressed sell to open instead of buy to close on Tesla. So instead of making what I thought was like $12,000, in 5 hours, I lost $16,000 and I'm extremely frustrated. Let me just go through. I don't know. I don't even know where to start. I haven't been monitoring my trades. I haven't been tracking properly just because I'm pretty frustrated. It's the first time I've ever made a mistake. I didn't even want to make this video, but let's just do it. So S&P 500, just with the rate hike, everything was too bubbly. War in Ukraine and Europe, unfortunately. Everything's going down, which is understandable. If you look at the S&P 500, like the heat map, everything is down. I'm not sure why financials are down. If we look at the energy section, I guess these are defensive, consumer defensive. So I guess these are up. That's fine. Like I'm not really invested in any of these. I'm too deep into tech, my fault. But what can you do? I'm probably not going to change. It's worked out for me for 12 years so far. So, having 2 bad months, there's nothing we could do. Jumping right into it. January, I lost $3,000. This is realized. February, I made $6,000. So a net loss of 3,000. Let's see, 3,000. No, net gain 3,288. If we go through what I did here, January, I made $668 in strangles, $1,500 in covered calls, lost $12,000 in iron condors, $175 in long calls, $3,600 poor man's covered call, $3,000 cash secured put. If we go to February, I've made $1,600 in strangles, $3,500 in covered calls, $1,600 in credit spreads. This is put credit spreads on Tesla only. Have been doing iron condors because I can't really predict the range. I can predict the bottom, I guess. $1,500 poor man's covered call, lost $1,800 in cash secured puts. I wonder what I did there. I think I was just rolling. I was rolling something down that was very in the money. The important thing is, this is just so frustrating. Here it is, 16,000 loss. I accidentally bought instead of sold. So what happened was notice here how I had this iron condor. I ended up, when Tesla was tanking, I ended up buying to close my sold position. And then when it kept dropping, so I still had my put, the put protection open. Maybe I probably should have filmed this or something. It's way too late now. This is January 24th. So instead of selling what I thought would have been at a gain, I ended up buying, and it was pretty bad. So I think I had 3 iron condors, so I ended up buying 3 additional puts instead of selling to close. Yeah, just unhappy overall. But what I like about trading options, even though everything was going down, if we take this loss out, I'm at a $13,000 gain, but I have this giant loss. As you can see, I was so frustrated, I stopped tracking I stopped writing down notes. I was just so unhappy, just pretty mad at myself. So why? The reason why, like, I was comfortable taking these like losses, rolling down at a loss. Everything kind of tanked. I didn't want to get assigned. Everything was too high. I was like, let me just accept some losses now instead of owning shares at too high of a price. You don't know. It was just uncertain. I wasn't sure what was going to happen, and I thought I made it all back here. I thought I made it back huge, but then I ended up losing. This has never happened to me before. First time. Last time. I'll check. The reason why, if you're wondering why, so I was supposed to be working, so at 9:30 a.m. I closed my trade, I ended up opening a trade. So I thought I closed my trade, but I didn't. And then I checked again at 3:30 p.m. and I saw that I did the opposite of what I wanted to. So I wasn't sitting monitoring my trades all day, because I'm not a day trader. I just do this on my free time at work. Free time at work? That doesn't make sense. I try to trade at lunchtime, or when I have a break or something. So just unhappy altogether. I hate everything. All these trades. What is this? I think I did this in my TFSA. So I try to do like 1,000 a month in my TFSA. In my tax-free savings account, I have more tech stocks. So those are at like a $20,000 loss right now. So I try to take more risks in my TFSA, because if they do shoot up, like, these are kind of penny stocks. Not really. Not really. They're just like risky, speculative investments. If they do shoot up, I want them sheltered in my TFSA, so I don't mind that I'm at like a small loss right now, 15% loss in my TFSA year to date, and I'm trying to slowly make that back, like a 1,200 a month, just selling covered calls on the positions I have. Is there anything I want to point out here? These are just like everything you've been watching. Like, I'm doing Tesla Iron Condors, Tesla Poor Man's Covered Call. There's nothing special. I don't really remember what was happening here. Since Tesla was tanking, I rolled down my Poor Man's Covered Call at like pretty big gain. So you see I made 1,700 here, and then I made 1,700 again. Yeah, another 1,700. So I rolled it down from like 1,000 to 950 to 900, and just extending out in time. And I made some pretty good money. Again, like, just frustrated with the whole market in general. I haven't been trading much, but yeah, I haven't been monitoring my trades a lot. I'm hoping. I've been kind of sitting on the sidelines. So this doesn't seem like sitting on the sidelines, but if you think about these, so all of these are in my TFSA, which is $1,600. Yes, I made 1,650 in a month in my TFSA. This is just one day. Like, you see all these trades. When I say I'm sitting on the sidelines, like, I already had these positions open. I'm just like rolling them out further in time. I have a lot of buying power, and I'm just holding it, just not sure what to do. With the uncertainty, I'm not going to, what am I trying to say here? Because it's so uncertain, I'm not opening too many new positions. I'm managing the ones I have, because let's say if it keeps going down, let's say SPY goes down another 5%, another 10%, all my current positions will be at a bigger loss, and I'll have to manage. If I do have this extra buying power, which I'm keeping around 150,000 US in buying power, I can continually manage to reduce my loss. So basically what I can do, sell more contracts sold out further in time. Just, yeah, like, I'm not sure what the proper thing to do is. The last time this happened, March 2020, I took a $20,000 loss, which is 10% of my portfolio at the time. I've grown it a lot since then. And I just sat on the sidelines for 6 weeks until things had like a direction. Right now, the market is so choppy, it doesn't really have a direction. If we go, what do we try to do? We try to look at SPY. Like, it was at 460, then it went down to 410. Now it's back at 440, like 430. There isn't really a direction. It's too choppy for me to make like a good decision or like figure out what direction it's going to take. So I'm just sitting on the sidelines. Hopefully, maybe I'll start trading a little more in March, I guess. I've opened some new trades in March on Microsoft. So Microsoft, even though that's March, that's not now. Microsoft has like let's go over here. How do I fix this so it looks a little better? So Microsoft, in the past like year, the bottom was 270. So then I sold 265 strikes, which is the 15 delta and like 38 days to expiration. I wouldn't mind holding Microsoft if it kind of drops 10% from now. So Microsoft was at 344 at its height. what is this? Okay, 350 at its height. So if I get at 265, I could sell covered calls or just hold it for the long term. I think I'd be fine. Is there anything else I want to show? Tesla credit spreads. I've been just selling 7-day to expiration. They've been working out pretty well. So like I sold here for 986, and then a few days later I closed at 500. So I made like $450 just for 2 credit spreads. I have the buying power to go up to 6 or 8 if something happens. Is there anything else important? AMD strangles, I've just been kind of rolling them down. So I had a 125 strangle and AMD. So I had 125, 140, which is pretty short. So I went from 125 to 120 to 115, and now my strangle's at 111, 140. So the 140 side is at like 15 delta, and obviously I'm in the money on the put side, so I'll just roll it down. I'm going to stop rolling down AMD maybe at 105, and then I'll just stop forever, and I'll just keep selling puts at 105. That is, I'm comfortable holding AMD at 105 or maybe even 100. I'll make a decision eventually. I'll just see how the market goes. But yeah, see here, I guess like the recent bottom is 100, so I'm not sure if I should do that. Look, it's hit 100 a few times. I have a lot of positions open. Well, yeah, I guess a lot of positions open. Like you see, I've been selling. I was selling cash secured puts on Facebook because it went down, and then closing them just to keep and give myself some buying power. I've been selling covered calls on TQQQ, like at the money covered calls, just like 2 for 7 days, and this has been pretty good. So I think I could write this 7-day to expiration. What did I do? 49 strike. I think something like this. So for 4,900, so no, I guess it would be 9,800. So I made 389 divided by 9,800. So this was 4% for 1 week, like at the money. I figured, why not? We'll just see what happens. Let me show you. I haven't given an update on my poor man's covered call. This has been like my best trade I've ever opened. It's been less than a year. Let's go down. Where is it? So can I freeze panes? I forgot how to do that here. View, freeze. 1 row? I don't really know how to use this. Whoops. All right. We won't freeze panes. So here, the money you should be looking at, the columns you should be looking at is the income, strike, the money if assigned, and the break-even stock price. So my break-even stock price, when I first opened it in May, was 627, and I've slowly brought that down to 537. Doesn't seem like that much, but it's been 10 months. These few months here where I was kind of rolling it up, Tesla went up so much, I was kind of rolling it up at a loss, and I was able to roll off further in time for break even here. And then just the IV has been so high. You can see just for the same expiration, I've been able to roll down a little bit and still make like 1,700. I ended up rolling it down too much. I went to 800, and then it kind of shot up again because I thought Tesla would keep going down. So I just like took a big loss just to bring it back up. Same expiration. So if we treat these as like one, I guess it's like 1,000. If we treat all these like the same expiration, it's like 2,700 just for the same expiration, same poor man's covered call. I'm going to, what am I going to? I'm going to roll this soon. I should do this soon. It's like March 5th right now. So I'll roll this to April 14th, hopefully make another 1,700, but we'll see. We'll see. If I keep it at the same strike, we'll see what happens. If I get assigned, so I bought one leap for 33,500. If I get assigned right now, I would make money if assigned. I'm pretty sure that's what I meant here. My total income would have been 31,000 in 10 months, which is amazing. I have until January 2024. What is this? January 2023, sorry. So like less than a year left, 10 months left on this leap, and I have the 300 strike. I might just accept the shares. I haven't figured out. We'll see what happens by next year. I might open even more. I am bullish on Tesla, especially at this price. So when it was at 1,200, not so much, but Tesla could go down to 537 right now. That's kind of my break even. I wouldn't be too upset just because I've kind of made a lot of money off of it. This is just off covered calls, like 9,700. Pretty sure that's what I did. something like that. So 29% return in 10 months just off this one position, which is pretty good. Pretty good. I have the poor man's covered call on Nvidia and on Apple. They're yellow because I haven't updated them yet. I've just been unhappy at my $16,000 loss. I can't stop thinking about it. So I haven't really been updating this. I should. I'm going to get back into it. As you can see in March, I have a couple of trades I made, which have been going well. Only one day so far. And I'm trying to provide as much detail as I can for anyone interested. But yeah, a little frustrating. Like last year, obviously I made 40% in 1 year, and you can't do that every year. I'm just upset or annoyed that I'm experiencing this again. March 2020, we already had to deal with the 50% loss, a 50% drop, and kind of dealing with like market uncertainty and volatility. Usually you don't get like a crash or correction or a black swan event, like every 10 years. Like I'm just a little spoiled because I only started trading after the last financial crisis in 2008. So I really haven't experienced something pretty bad. And I just don't want to have to go through it again. There's so much uncertainty. I know I say that a lot, but ideally I just want the market to pick a direction so I continue trading. I just don't want to, like, knowing my luck, if I deploy my capital, if I sell more puts to try to make, my aim is $10,000 a month. If I sell like puts just to try to deploy all the capital, I know the next day something will happen and it'll tank. Like my timing is perfect. No matter what I do, just like the next day, everything will tank. I'm waiting for a few red days. If I get like 3-4 red days in a row, I might deploy more capital just to take advantage. Since the market is being choppy, like you see AMD was 99 here, went up to 134. So if you get a bunch of red days in a row, like you see here, it had like 10 red days in a row, I think it's you should sell puts just to try to take advantage, because the market is rarely straight down, especially with a market like this. If the conflict does get resolved, it might kind of pop back up. I'm looking at Visa right now. I might do something on Visa. With VIX being as high as it is, like 31, 32, everything becomes more viable. Like the safer stocks, you start to make a little more money, like Apple and Microsoft. Let's take a look at Apple. When VIX is at 15, 16, there's no money to be made at Apple. So it's kind of risky. You have to go closer to the money. But let's look at Apple. Let's say, what is 1 month? Closer to 1 month. Let's do this one. So if we take something like 10% out of the money, like 145, you're making a percent. You make like 1.5% in a month for something like this, which is, implied volatility 33. It's pretty low. If we take a look at something more risky, what is riskier? So AMD will be slightly riskier. We'll try to do also 10% out of the money just to see what it's like. AMD implied volatility 10. Yeah, I think I'm just looking at the wrong month. Let's look at, this is a long video. Okay, so the IV is like twice as much as Apple. So if we go 10% out of the money, we should make a little more money. So 108, what is 10% of this? 95? I'm bad at math. Accountant. So again, we're making 2.5% here just because the IV is higher, going 10% out of the money, same expiration date. Ooh, I think I chose the wrong one. We might even make a little more. So 95, you're making a lot more. Sorry, let me see the return on this. 3.35 divided by 9,500. You're making like 3.5%. So that's where the IB is. Let's do something riskier and let's go 10% and let's see what happens. I'm trying to think of what could be riskier. If we go, is NEO riskier? It is. So NEO is even riskier. And if we go 10%, which should be like 16. So if we go 16, we are making 1 divided by 16 times 100. We're making 6%. So I hope, like, we're going up 30% every time, going 10% out of the money, selling a put for the same. So we did Apple, AMD, NEO. You see how much you make. So Apple was 1.5%, AMD 3.5%, NEO 6.25%. So you see how IV, like the VIX does play a big role. When VIX goes to 15, 20, when VIX is like sitting at like 15 for Apple, there's just no money to be made. It's better to hold the shares instead of selling options on it because you'll make more money. The lower the VIX, the kind of riskier it is for options traders because we have to go closer to the money. With Microsoft, I went 10% out of the money for 30 days. Chances that Microsoft would go down 10%, like obviously it has happened, but would it go from 350 to 250 to 200? It could happen. Hopefully not. That's kind of the risk we take, but I wouldn't mind owning at 265. Maybe I'll even roll down, but I wouldn't mind owning at 265 just given the state of affairs and everything happening. I don't know. Maybe I'm just trying to make myself feel better. I'm just trying to talk myself out of a bad scenario, but I think I'm going to leave it here. It is kind of a long video. 6,300 in February, kind of making up for this giant loss. This bothers me every day. I kind of want to delete. I want to delete this entire Excel and just start from scratch. So I don't have to stare at this, but just pretty unhappy. Like this is a lot of work wiped out. Not because I made a bad trade. I think I was going to make a good trade. Like this would have been profitable. So not only did I lose 16,000, I thought I made like 12,000. So this is what I wanted to see. I'm going to stop talking about this. Like it bothers me so much. On to March. Hopefully you guys will see me back to like my normal, like 10,000 a month. I'm just waiting for some certainty. I don't know. Maybe it might not be the best idea to deploy more capital when there might be like, more war. I know there's already a war in Europe. I don't want there to be like a world war or like nukes going off or that nuclear reactor kind of going off. Yeah, I'm going to end it here. Hopefully I can make some trading videos next week. I'll release this on Monday, March 7th, and then hopefully I can film like TFSA trades just to show you the money I've lost in my TFSAs. Like I'm down 15%, like I mentioned, but I'm going to try to make that back by selling covered calls. Thanks for watching. Let me know if you have any questions and tune into the next one.